Good morning, Andrew, and happy 2022. You know, making a New Year's resolution to save more is often a top financial goal, yet many Americans admit they're not sure they can stick to it. Some financial advisors say don't overcomplicate your plan.
Try and simplify your investments and simplify your financial life. And that's especially important with so many people now changing jobs during the pandemic. It's a good opportunity to reset and simplify some things.
So reset your retirement savings goal with this in mind. Keep in mind that in 2022, employees can contribute $1,000 more than last year to a 401k or workplace retirement savings plan, up to $20,500. Now, if you're 50 or older, you can add a catch-up contribution of up to $6,500. The dilemma for many workers is whether to put that pre-tax money in a traditional 401k or after-tax dollars in a Roth 401k. Here's what some advisors say.
They may recommend you put all in a Roth, particularly if you are in a lower income tax bracket and the tax savings is not really important to you right now. If you're in a higher income bracket, perhaps having some pre-tax savings could be beneficial.
Either way, review your automatic contributions. Increase your overall contribution rate by, say, 1 or 2%. Try to at least get your company's matching contribution, even if you can't fully fund the account. And rebalance your investments so your portfolio is not taking on more or less risk than you're willing or need to take. Now, some advisors will recommend investing your retirement savings in a target date fund that gradually shifts from stocks to bonds as you get closer to the date that you'll need the money. And Andrew, we have a lot more information on the financial moves you need to make right now at cnbc.com/investin.you.
So, a question for you, which is, what do you think you should be doing with your old 401k when you start a new job?
Now, thankfully, a lot of people are starting the new year with a new job, and what they need to keep in mind is that you can keep that 401k money with your former employer. You can leave the money there, but you may want to move it. You may want to consider rolling it into a new 401k with the new employer or into an IRA, depending on the investment options. You just don't want to cash it out because you'll likely face a significant tax hit and pay a penalty, depending on your age.
Okay, so but what about saving in an IRA? Are there changes for 2022 that you need to know about?
Yeah, a lot of folks want to save on their own in an IRA, and that's a smart move to make. The amount of money that you can contribute to a traditional or a Roth IRA is the same in 2022 as it was in 2021. $6,000 or $7,000 if you're 50 or older. But now, if you didn't make an IRA contribution in 2021 or you didn't max out, you still have until the tax filing deadline in April of this year to do that and have it count for last year. And then you can also make a contribution for 2022. So if you're 50 or older, you could potentially put up to $14,000 into an IRA this year, giving a major boost to your top financial resolution, which is saving more in the new year.